how I made £1,800 using my boring Forex trading strategy. I'm going to be explaining today how I made 1.8k using my everyday trading strategy. For the whole of 2023, I've been sharing tons of information about my trading strategy, and you can watch every single 2023 video because it's going to open up your eyes to how to really trade. I don't have executions for this. I'm just going to be breaking down the trade I took. I did executions all 2023. So if you want to see executions, go to all my 2023 videos. But anyway, guys, let's get straight into it. You know, I like to separate out my weeks and my days as well, but for now it's just the weeks, keeping my chart nice and clean so you guys can follow along. Last week, what would you say this is? Pause the video. Is the market trending from last week? No. This was more so a sideways action consolidation. With consolidation, you guys know there's going to be liquidity on both sides. And if you guys want to know more about liquidity or money, where the money is in the market, you can watch my whole liquidity series. It will truly bless you. There's going to be liquidity on both sides. With this in mind, I'm of the selling mindset. So let's just go up the time frame to show you that I'm bearish. So as you can see here, so this is the beginning of the year. So let's go ahead and delete this. So this is the beginning of the year. We have been dropping since the beginning of the year. Price is going to accumulate, then expand, accumulate, and there's going to be an expansion, accumulate, and then there should be another expansion. And don't forget accumulation or retracement. The idea behind that is the same. It's to generate liquidity to then run it later. I'm on the 1 hour time frame. I know that I am waiting for the next expansion to the downside. I'm being patient. I'm trying to figure out when is the next best opportunity to sell. One of the key things about my trading strategy is I like to sell above a high when price is running out liquidity. Above all of this, there's going to be money above this. Money on top and money beneath. There's going to be liquidity on top and beneath, or buy stops on top and sell stops on the bottom. On Monday, when EURUSD ran above the previous week's high, this is where buy stops are being activated. So obviously this is going to be more riskier to jump in on. You're going to be buying above highs. You're going to be buying when price is going up. And it's more riskier to jump in on. All of you had the skin in the game and you've been doing this for quite some time, you're going to know to sell from above these highs. But what you could do is, if you're unsure about this, what you can do is you can catch the next best opportunity. When price drops like this, let's zoom in out. When price drops like this and leaves inefficiency, you know that this inefficiency eventually is going to need to be cleaned up or traded into to provide buy side to the market. Because here, the only sell side was offered to the market here with this large sell candle. There was no buy candle within here. So you can expect price to come all the way up and fill in the whole imbalance and then drop. This is Monday. So let's go ahead and separate out the days now. So that was Monday. Okay, there we go. That's Monday's price action. You can see we filled in some of the imbalance and then we dropped. We didn't really go nowhere. We didn't trade beneath this low here. You can see here, price dropped and did not trade beneath it. So what did it do? It created relative equal lows. I'll touch on this a bit later on. So don't forget, I'm keeping my strategy very simple. Everything that's happened so far is I'm bearish because I looked at the high time frames, and now I'm waiting for price to run above a high before selling. It didn't on Monday, but if you never caught the move on Monday, you could have looked for a move on Tuesday. This is what you would do. You would mark up every single point of interest that price could use to turn back around. So on Monday, when price is getting active, the only point of interest I can see, because we're not traded beneath this low yet, is back to the imbalance. So, and it's not just here. We've already traded into the imbalance here and filled in the majority of it, more than 50% of it, but there's still a piece of an imbalance remaining above here. So let's go ahead and mark this up. There's a little imbalance still remaining. And guess what, folks? There's also an up close candle here. There's an up close candle here. This buy candle is an up close candle. Now we're getting into the nitty gritty. We're getting into my entry now. With up close candles, from this low to this high, the whole thing is an up close candle. I like to get active from the lowest part first. This is the low and the open of the up close candle, or 50%. What I'm going to do, I'm going to mark up 50% using the fib tool like I've done. Just put a line here for 50%. Just to make it easier. So this is 50% of my up close candle. This is the rest of the imbalance. And then this is the low and the open. When price is pushing up higher and runs out this high here, then I know that price wants to run even higher. I've identified a few points. And now this is how you would play it. You would have multiple POIs, multiple points of interest. Don't be listening to those folks who say you must have one point of interest. And if you don't get it right the first time, then you don't know what you're doing. Guys, it's okay to have multiple points of interest. I have multiple points of interest. That's been blessed for me. So my points of interest then are, I have the rest of the imbalance fill, the low and open, and 50%. And I'm not saying I will go for every single one of them or these lows. Obviously, I'm believing price is going to get to the up close candle. But I'm just saying, for example, I can either opt for this, the rest of this imbalance fill in the whole thing, and then jump in with a stop loss above 50%. Or I can jump in at the open of the body right here, of the body of this up close candle, stop loss thereabouts or just above the 50% line. Or I can wait for price to get to 50%. So those are my three options. This was not one I was choosing, by the way, but I was just giving you this as an example for those who want to get in straight when price taps into this. As you guys know, there's going to be different risk to reward ratios depending on which one you choose. Let's just say you chose this one for whatever reason, stop loss above 50%, and you was aiming for certain lows. If you put your stop loss around here, around that 97, 98, and obviously there's ways to work it. You don't always expect price to run all the way up into 50%, but ideally the best stop loss is going to be above. The next best one is going to be around 50%. Or just above 50%, just so you guys know. So anyway, guys, if you went for this one, you're looking about an 11 pip stop loss. If you went from the open of this one, you're looking about a 6 pip stop loss. And then obviously 50%, you would have put your stop loss above the high, and that would have been roughly about 8 pip stop loss. The one I opted for was this one here. So I entered it in around 93, so I caught it a little bit higher. My stop loss was just beneath 95. It was about 95.8. I know it was a very small stop loss, but I'm comfortable trading these kind of stop losses. I'm more comfortable doing this, and my philosophy is if I got stopped out here, I would have entered again at 50%. That's just the way I do it. You don't have to do it like that. That's just the way I do it. And it doesn't always play out. Sometimes I do get stopped out. I do take losses as well because I do opt for these smaller stop losses. But it is what it is. But anyway, guys, I entered around 93, had a stop loss here. Don't forget, idle stop loss would have been above 50%. That would have been, let's just say, a 5 pip stop loss. Even if you was to stretch this, double it, that's a 5 pip stop loss. When price got up here, this is when I'm looking to take a sell. And I don't necessarily want to see price beat this. I don't want to see price get above these areas here. I don't want price to close above this imbalance here on a 1 hour time frame. We're going to go ahead and play it out. This is not where I'm taking profit, by the way. This is going to be a drawn price. So I know that if price tags me in and then runs beneath this low here, we should continue to see a drop to run more liquidity. These relative equal lows down here, which is also the previous week's lows. Then I'm going to look to take TP nearabouts these lows. All I've done is I identified a high time frame trend. Price was dropping. I waited for price to run above a high. It did. We're not talking about Monday. We're talking about Tuesday, what we could have done on Tuesday. Tuesday, I'm looking to catch the mitigation play. Inefficiency here, up close candle here. I want to catch the mitigation play. In other words, I want to be in when mitigation is taking place. So what I'm going to do now, I'm going to go down to the 15-minute time frame, because what happens, guys, is price really gets moving. On a 1 hour time frame, it's just one candlestick. One candlestick at a time, forward once. This is where we get tagged in. Don't forget, price is trading higher. It's traded through the imbalance so far. It's traded through the imbalance, the 1 hour imbalance. But don't forget, the 1 hour is not over yet. It just started. It just started. It's traded up into past the low and the open, up into the up close candle, and it's tagged me into the trade. This is where it tags me in, around that 93 mark. And I believe I had 2 trades here. One was a little higher, one was down here. Let's go to the next candlestick now. Next candlestick, we push down lower. Don't forget, 1 hour is not over yet. So just bear that in mind, guys. Let's go again. And then next candlestick, we go all the way down to the lows. We take out these lows and we get down to our level, which is the previous day's low. It happened in quick time. I know there was news that took place too, which really sped up this move. But I'm going to show you something. On a 1 hour time frame, what does it look like? The 1 hour time frame, there's no closure above the imbalance. We've hit that up close candle, and then look how we closed. We've closed down here. So now you guys see how I was able to catch that trade. I didn't have to be in from the highs, the more riskier play. You could have waited for the mitigation play to drop. And even if this didn't come up to tag this in, so what? I missed a trade. There will always be another trade. Just because I've missed a trade once, or it didn't play out 1 time or 2 times or 3 times, doesn't mean, again, that I'm going to switch up my trading strategy to fit something else so I make sure I catch it. No, I'm going to play the same game. I'm going to keep my trading strategy very boring, and play the same game. Wait for the mitigation play, get involved, and then wait for price to run out these lows, which should give me an indication it will want to drop lower. So this was the trade that I took that made 1.8k. Well, there was 2 trades altogether. So remember that, guys. I utilized a very, very simple strategy, is waiting for price to run out liquidity on the top side. And if I miss that trade, I believe I've told you guys about my 3 best entry opportunities. If I can remember the video, I'm going to link it right now. My 3 best POIs. I can't remember what I named it, but Basically, this is how I would operate. And you know what? Even if this was you entered from down here, this still would have been a juicy trade, guys. This would have, just to get down here, this would have been a 1 to 5 R trade. If this was you who jumped in from nearby this level down here, this still would have been a juicy trade, guys. That's a 1 to 9 R trade. And then one last thing as well, guys. Don't forget, you don't need to panic when price runs out liquidity. When price runs out liquidity like this, we've taken out liquidity on the top side. Where's the rest of the money? It's going to be on the bottom side. That sell side liquidity. That's where that money is going to be. So this is why I took partials down here. I took partials, not at the very lows. I took partials, I think around 23 or around these wicks, when price got into these wicks. That's why I took partials in these wicks. Sometimes you guys message me and say, you missed a trade because you was waiting for a certain thing to happen, because you was waiting for price to hit 50% of the up close candle. Now you see why, and hopefully you guys understand why I don't always opt for 50%, because sometimes price does not get there. So this is why I always opt for somewhere near about the lowest point of the up close candle, near about the body of the up close candle. That area is more likely to be traded into, so that means you won't miss a trade. And all you have to do is just stomach having a bigger stop loss. Just accept the fact you're gonna have a larger stop loss than normal. Yes, you could have waited for 50% and had maybe a potential lower stop loss, because really truly you don't want to see price move beyond 50% like that. Just accept the fact that you're not going to catch perfect entries. Give yourself a bit of room. A little bit of drawdown won't hurt you. I was in drawdown. Well, me personally, I was in drawdown for about what? I entered in 93. One of my trades, I was in drawdown by, I think, 1 pip. And the other one was 1 point something pipettes. Small piece of drawdown. But look, if you had to stomach a 2 pip or 3 pip drawdown, so what, guys? You're not always going to get perfect.